All right, time now for your Money Watch report. The government released its latest monthly report on inflation this morning. CBS News business analyst Jill Schlesinger here to break it all down. Jill, good morning. Let's get to those results. What did the April data show, and how does it affect the real life that we all have to live? Good morning.
Yeah, good morning. So we saw some improvement in the data over the course of the month. The Consumer Price Index, one of our favorite inflation gauges, was up 3.4% from a year ago. That's a little bit of an improvement from the previous month. We look at the core level because it pulls out food and energy, which can be kind of volatile. And the core rate is up 3.6% from a year ago. It's the lowest level since April of 2021. So we're seeing progress, but we got a ways to go before we get to 2%, which is where the Fed would like us to be.
All right, so I know a lot of us want to know about what you think about interest rates. Do you have any sort of indicator as to whether people can refinance maybe by fall, maybe by the beginning of next year and feel like they'll get a better rate?
Dude, slow down, because I'm just telling you tiny, tiny little changes.
A little bit.
It does not mean we're going to get the big refinancing wave. Okay, but here's the good news. If you think about this, if we start to see inflation march lower over the next few months, what we could eventually see is the Federal Reserve cutting rates maybe at the September meeting. I don't think they're going to do it at the June meeting. But if we get that in September, the good news is that mortgage rates, they're not directly tied to those interest rates, but what you could start to see is that mortgage rates start to fall in anticipation that all interest rates are starting to go lower. So do I think you're going to be able to refinance a 7% loan to a 4% loan? No. Do I think that we could start seeing rates drift down below 7% towards 6 and hopefully towards 5? That's where we hope we get to. And I know that's a bummer for people who are looking for homes. But you know what? If this trend moves in the right direction, it could be very good news for anyone who's a borrower.
I talked to some of my baby boomer friends who say, stop crying about a 6 or 7% loan. We were paying 10 to 15% back in the 80s, but we got spoiled, right? Let's talk quickly about debt. Well, there are some new numbers and some new metrics out about debt. What about that?
So we know that credit card debt actually declined just a little bit in the first quarter. What we do as consumers, we go on financial diets on January 2nd. We stop spending as much money. We use our tax returns to pay down debt. But overall, credit card debt is at $1.12 trillion, near an all-time high. It's up 13% from a year ago. Credit card debt is up 45-50% from 3 years ago. So that just shows you how hard inflation has been on so many consumers.
Okay, Jill, we appreciate you so much. It's always great to talk to you, my friend. Have a great day. CBS News business analyst Jill Schlesinger.
You too.